And then if you take it broader than that, Trump is trying to produce himself out of the debt issue that the US has. I think he wants to increase GDP year after year in a faster pace than the debt is growing year after year. But by the fact that AI is going to reduce a lot of cost and it becomes deflationary even more, it's going to put a lot of pressure on the entire debt that the system has. So I think first question on that standpoint is like, how do you stay sane as a regular investor or just a human being when you see all these things happening in the world?
I mean, it's a good question. I mean, it takes a lot of work. During during the whole kind of COVID stimulus period, um, it took a lot of hours because like there were certain things you had to get right about investing, and it was very stressful, and it was a rather insane environment, and you had to be right about macro to invest correctly, right? You had to know, are we gonna be in a big deflationary spiral and therefore buy bonds, or is all this stimulus going to be inflationary, therefore buy stocks and gold and Bitcoin and things, and energy producers and things like that. And so getting that right was key. I think in the next 5 years, getting AI right is key, which means kind of being able to understand its pace, being able to understand that it is powerful, but it's not magic. Like you said, it does make a lot of mistakes. So it is both things are true simultaneously. It's a massive productivity boost for certain types of industries and for people that know how to use it properly. But it also does have pretty fundamental limitations, even more limitations when you think of it in robotic sense in the real world, because then you take AI and you put it with all sorts of physical constraints as well. So there are constraints, there are shortcomings at a pretty foundational level with it. And I think it comes down to having a mental model that you update as needed. So you kind of sit down, you study it, you kind of know its limitations, you think through things that'll impact, things that it won't impact too much. You read bulls and bears and you kind of make this mental model. And then every month, more data is coming in, and you're able to slowly iterate and see if your mental model is still holding up or if you need to tweak some aspect of it. Or in a rare case, if you have to throw your mental model out and kind of start fresh because you realize you made some sort of foundational error that's been invalidated in some way. And so I take just a pretty systematic approach to it in a similar way that I took an approach when looking at money supply growing by 40% in the US and in many other countries in 2020 and 2021.